morning, everyone. This is Financial Literacy 101. I do apologize for the sound issues, but hey, listen. First and foremost, you're going to ask me one thing. You're going to ask me maybe two things. You're going to say, hey, Ross, should I invest in GameStop? Absolutely not. Should I invest in AMC? Absolutely not. And I'm going to tell you why. Quite and simple, it's going to be the most volatile, most dangerous, most risky investment you ever make in your damn life. And usually I hit something and the video comes on. Good morning. So let's first and foremost, let's look at GameStop in its entirety, because I believe that it's very important that you guys understand the volatility. And we're not going to do a stock review on GameStop or AMC, but we're going to briefly look at it, because I think that you need to see that, again, the Wall Street Bets Group is controlling this stock. Here we go. More issues. Today is that day. Today is the day. Okay. But anyway, this stock right here, ladies and gentlemen, over the course of the 5-year period, I'm going to do more like in a year. You can tell that a lot of things been going on with this particular stock. I mean, it's been absolutely volatile. The different spikes that you guys see here. When I'm looking at, let's see here, January 27th, GameStop was worth $347.51. Okay, and then it dropped down to 325, and then it took a total deep dive to $45 per share. $45 per share, spiked back up to $265, then it dropped back down to $120, then it dropped again, and then ever since that moment, this stock has been so volatile. For you guys who want to be solid and safer investments, GameStop is not where you want to put your money at. Now, if you take for instance $1,000 that you simply want to gamble, and see, gambling and investments are totally different. But when you invest in certain stocks, it's considered gambling. And at this point in time, because of the Wall Street Bets Groups on Reddit is short squeezing the stock every chance they get, this is a gamble. Okay. And then we look into the other stock when it comes to AMC. As we can tell, that AMC is definitely a gamble. Over the course of the year, as we can tell, pretty much AMC over the course of time was slowly going up, slowly going down, anywhere between $4 and $5. It even dropped down right before the break. January 12th, it was at $2.29. Then boom, all of a sudden, Wall Street Bets Groups, they buy large positions. They was buying option contracts. They were buying thousands of shares, and it jumped up to $19. So a lot of people became very, very rich. And then they dumped it, and it dropped down to $5.55. Now the volatility is still going up. Even if we watch the news here, look at this. Let me blow this up. GameStop, AMC short sellers lost 754 after Tuesday rally, okay? And again, this is the analysts are saying about these particular stocks. Okay, I can't believe they have an 11% buy on AMC. Okay, and then GameStop, they're telling you not to buy this at all. Look at this. Give me a second here. 33% hold, 66% sale. No, because it's too volatile. Here's the news. GameStop is building an NFT platform over Ethereum. Is that good for GameStop? Yes. See, in my opinion, GameStop is a great place to go buy video games and video game consoles, and also accessories. And they also have collectibles as well. Great place. I used to buy a lot of my video games from here. Not too long ago, I just bought the PS5. I played Madden. I played 2K. I'm playing the Star Wars Jedi game. I like all those games, right? I'm somewhat of a gamer. Sometimes I get on my game kick, and sometimes for weeks I won't play it. But right now I'm playing Jedi. But anyway, it's a great place to go and shop and buy your video game accessories, etc. But when it comes to investment, leave GameStop the hell alone. Unless you just know what you're doing. Unless you have $1,000 that you okay with losing. Now, that $1,000 could, quite frankly, make you $10,000 at the way that this stock is moving. Now, again, I told you guys I'm part of the Wall Street Bets Group. I'm not one of those mega investors. I'm following the news. Okay, and some guy had a large position. I should have popped that up for you guys. But I'm just telling you, This is not where you want to put your money at, guys. When it comes to AMC and GameStop, this is not where you want to put your money at. The volatility on this is just too damn much, okay? So let me tell you about some stocks that I believe that, you guys should absolutely be investing in. One of my favorite stocks, and I don't want you to look at this stock. I don't want you to look at the stock price. I want you to look at the amount of money that you can invest constantly every month over time, exercising dollar cost averaging. Okay. And I'm also looking up some of the news that I saw early on this morning when it came to Wall Street bets. Okay. So I am looking at that, but we're all going to look at QQQ, Invesco QQQ, but I also want to look at the news that I saw this morning. Give me 1 second. Let's see here. That's not the news that I needed. Forgot where it was. But nonetheless, let's go over to this particular stock. This is where you should put your money, okay? This is where you should put your money. Good morning, Prime X, learning every day, and Jacob Kitchen. LO, GameStop is a good buy to the moon. No, it isn't. See, you're not going to come in this platform, Jacob Kitchen, and have some of my subscribers invest in this very volatile stock so you can make money. I'm not saying you're doing it maliciously, okay? But a lot of times when I see a stock so volatile, no, we're not going to do it here. I'm going to make sure that I'm giving my subscribers great investments. And this is my perspective. And I understand you are entitled to your perspective, but the analytics behind GameStop would tell a person who does not like to gamble and play with their money not to invest in that stock, okay? Because some people got lives, some people got careers and jobs. They can't be watching GameStop like this every second of the day. But those guys on there who are millionaires, the only thing they do is throw around a couple $100,000 and invest in stocks and wait for they peak and then dive down. That's why. Okay, no malice. I see you, no malice. He says, screw Wall Street bets. We should look into the information about how naked shortage game AMC is. That's why people are buying it. No. I understand that. But what we're talking about today is the variation of a very volatile stock, which again, riskier stocks will have a higher payoff. But we're talking about consistent growth over the course of time. Okay. This is not financial literacy 201, 301, or 401. This is 101 because I want for those novice and intermediate investors to grow their wealth. And the only way to grow their wealth is in secure investment. Essentially, no investment is safe, but there are safer investments than others. And when we come to certain stocks and shares, when it comes to power shares, QQQ, this is a safer investment. And I got it. Some of you are looking at the price of the essentially stock. But again, ladies and gentlemen, you can go ahead and invest $100, $200, $300, whatever the case may be, and buy a fraction of the share. But let me show you the trajectory of this stock being safer than GameStop or AMC. Now look at this. Don't you see steady growth? See, this is what I love. So if you would invest into this stock, let's say for instance, January 17, 2016. Let's say, for instance, you just had $200, so you went ahead and bought 2 shares. Then steadily, your 2 shares grew exponentially over the course of 5 years. Now, of course, when the pandemic hit, they dropped down to 170. That's when we all should have bought in. But look at it. It peaked to 292, and look at it today. Today, it is worth $333. See, that's absolutely phenomenal. This right here is absolutely phenomenal. This is better than your emotions being playing with when you go over to AMC, when you go over to GameStop and you see craziness like this. When you see craziness like this, no, I don't want that. Now, granted, you should have some sort of risk inside of your portfolio. But there's a certain level, there's a certain threshold, there's a certain ceiling of investment that you should have, of risk that you should have. And to me, this is not it. This is not the way I essentially look at it, okay? So we go back, okay, and we look at this particular share. We look at this particular market. And before we get into pretty much the breakdown of this stock, the Invesco QQQ ETF is a widely held exchange traded fund. It's an ETF. And the great thing about this particular ETF it tracks the NASDAQ 100 index. And there's a distinct advantage. Now, it follows all sort of stocks. Now, passive management, when it comes to this particular stock, this particular ETF, keep your fees low. That's taxes. That is the expense ratios, okay? Operating costs. And investors like yourselves are rewarded with the full gains of the low volatility that this index, if it rises. Now, however, also take that the NASDAQ 100 full losses when it falls, but the NASDAQ hardly falls. I mean, when the NASDAQ falls, so does the S&P 500, so does the New York Stock Exchange. But as we will break down in this, is that the Invesco QQQ ETF is a publicly traded fund. I mean, the stock holdings are dominated by big technology-related companies such as Apple, Amazon, Google, and Facebook. I mean, the QQQ ETF offers investors big rewards during bull markets. And then when it's in a bear market, it still somehow grows a little bit. Even in that, you have very, very low fees. So that's why I love this ETF. And I think that all of you guys should essentially buy into it. That's my perspective. That's the way that I'm looking at this particular stock. I don't want you guys just to go out and buy any darn stock. Because again, even though that you should have some sort of level of risk, but when it comes to GameStop and AMC, and as I told you before, if you're not watching that very closely and you're trying to make steady growth, it's not sustainable. Let's see here. Jacob Kitchen says, I'm with you. I have a good position in GameStop because I bought at $40. I take some profit to secure my initial investment. Okay, I get it. I understand. Me being an investor, I had a position in GameStop as well, but that's not the information I'm going to give my investors. Okay. Now, granted, I will tell people, and I've done, man, I don't know how many stock reviews I've done, but I'm revisiting this particular stock because I made a bad decision. I sold QQQ. I should have never sold it because I knew the analytics behind it. But again, I made one of the largest, dumbest decisions of taking $10,000, investing it into Tesla, thinking that Tesla was going to hit. Because it was on a trajectory to hit. Everything was telling me that it was going to hit $800. Then, of course, Elon Musk, he had said something and it dropped down to $650, and I lost $10,000 on that option. Ouch. Financially, ouch. Okay. So now, me and my family was eating fresh ribeyes and steak. Now we eating chopped suey out of a can, because of the bad decision I made. It's an analogy. I'm just joking. But we did stop eating ribeyes and we went to beef chucks. So I'm trying to give you the mistakes and information that I made. But nonetheless, let me move on. So let's break down this stock, ladies and gentlemen. All right. So over the past 5 years, PowerShares QQQ has been up 213%. The past year has been up 43%. The past 3 months, 5.7%. The past month, almost 2% down. The past week, up 3%. And then today is up 0.3%. And the market is live as of 9 minutes ago. Okay, we can get into this. But I think what's more important for you guys to actually see, yes, it has dividends. Look at the 52-week low, $223.94 compared to the 52-week high, which is the year's high, $342. Of course, it's in growth and value in ETFs. Here's some of the investments that I've made where it also had automatic reinvesting, okay, which is another option that they had on Robinhood. Very, very, very imperative. Let me share another screen with you guys so you guys understand the other positions. So I know a lot of times you guys want to know the positions, the different assets and stocks, the different positions that are inside of the ETFs. So let's look at this very cleanly here. So when we're looking at this particular stock, okay, in the top holdings inside of QQQ are Apple, Microsoft, Amazon, Facebook, notorious Tesla, Alphabet, also known as Google, okay, NVIDIA, Adobe, PayPal. So when we're talking about investment, these companies aren't, these companies aren't going anywhere. Okay. So you should be investing in this particular stock. And again, when I'm looking at this stock, and let me go back here. When I'm investing in this particular stock, I am not looking at the stock shares. What I am looking at is the amount of money that I could potentially invest in. So I'm gonna do something that I've never really done before. Usually I just go ahead and invest $100, $300, $400. What I'm gonna do is for those people who say, hey man, I got $10 a month that I can invest. Okay, cool. You go in here, you put in $10 a month. Now, because I have no money right here in my buying power, Robinhood is gonna pretty much take me through here. You don't have enough buying power, deposit the funds. It's gonna say how much you want to put in here. I'm gonna say $10. Okay, review it. Deposit funds, a couple of seconds will go past, and then boom, there it is. Then I can review the order. And right here is important. Dollars. I can either buy in dollars. It says you're placing a good. Okay, cool. So they know I can't buy shares. So I'm just gonna hit buy. Okay, I gotta log in. Here we go, Robinhood. All right, done and done. Right? I'm gonna do a quick refresh so you guys see the $10 that I just invested. And this again, for those people who may not have a lot of money, but you still have money to 10, 20, 30 bucks. So I can show you. Here it is. I just bought $10, my market value, $10 worth of Triple Q, that the average cost of this particular stock is $333. The portfolio diversity is 0.04%. Okay. So for those of people who can do that, but now I'm gonna go back in and I'm gonna say, okay, well, $10, I think I want to do 150. So I already have 100 in. I already have $10 invested, so I'm gonna do 140 because essentially I want to invest 150, and then we're gonna go through the same sequence that we went through before. I'm gonna do 145 just to make sure here, just a little bit over, but I'm only going to invest $140. Hit review. I'm going to buy it. There it is, done. Refresh. I like to refresh. Sometimes if you wait there, it will automatically compute. And then I'm gonna go scroll back down, and there it is. Now I have 150, 149 because I lost 4 or 5 cents of the investment because the stock is going down, but that's okay. But the point I'm making here is that this is a much safer investment when you compare it against AMC and GameStop. See, there's no large group in here trying to control Power Shares Triple Q, or if you want to call it Invesco, some people like to call it Trust One. So this is essentially Invesco Triple Q Trust Series One. That's the whole name of it. But let's just call it Triple Q for short. So if you want a safer investment that you can invest $10, $5, 15, 20, or you just saw me invest 2 different deposits of $10 inside the share, and as well as $140 inside of this particular stock, that is what you can do. But again, I'm not going to touch GameStop. I'm not going to touch AMC. I am not going to be watching the stock every second of every day, waiting for Wall Street bets to short squeeze the stock in order for me to buy in low and buy hundreds of shares. So potentially when they play with it again, I can go in and buy it. I'm not going to do that. I'm not going to do that at all. Let's see what you guys are saying. Patrice Dominic says, I have a position in VOO as well as a low expense ratio. Definitely. That's a very good investment as well. Patrice, I've actually told people about that investment as well. I'm a big lover of ETFs, okay? They're slow growth, but they are consistent, okay? They are consistent. So when you're looking at, safer investment, those are the ones you want to look at. Let's go over to WeBull. I think I'm going to start using this sometimes. I love the way this looks. Okay, so again, this is Triple Q. We're looking at this potentially live here. And as we can tell, year to date, this is where I'm at. Year to date over to your far right corner, but at the top. Year to date, the stock has been up 35.52%. That's over the 20% threshold that I love to invest in. So when I invest, ladies and gentlemen, I look at a stock and I'm saying, okay, well, again, I go through all the back channels of looking at financials. I'm looking at their market capitalization. I'm looking at their assets. I'm looking at their revenue. I'm looking at their earnings. I'm looking at where they're investing their money, reinvesting their money inside of the company for innovation and inventions and productions and efficiencies. Are they trying to make their company better, basically? And I look at the financials first. That's kind of like pulling back at the layers of the onion to see What are they doing? Because, you know, here's the thing. I'm gonna make it applicable to your life. You know how a lot of you guys show your money, meaning that you have a nice car. You may even have a nice house, but you don't have any money in the bank. Okay, so essentially, a company could be looking really good, paying their employees really good, but they broke or they're going in debt, like GameStop. Because GameStop, which you guys, and I've told you this before, GameStop closed over 1,000 stores around the world. That is not a company. Now, let me backtrack. One or two things. That is a company that is doing horribly bad, or they are foreseeing the future and restructuring their business around technology and what they're forecasting. Okay? Now let me show you this. When I look at this, give me 1 second here. Now, I love this doing these little short questions on Google, and I'll show you what I'm talking about. This is where people were saying, is QQQ a good investment? And this is 2020. And this is probably how somebody, wrote this or read this. QQQ stock is a great option for investors who want to make sure they don't miss out on the next Amazon or Google. When leading NASDAQ stocks get big, they land on QQQ. This is a low fuzz way to own a diversified basket of hot stocks. Then they went on to say, is QQQ the best ETF? QQQ has low fees, high liquidity, and this only NASDAQ ETF. The NASDAQ 100 tracks the 100 largest non-financial companies listed on the NASDAQ stock exchange, weighted according to modified market capitalization strategies. This is what they went to. Then they went on to say, well, Invesco QQQ trust quote is equal to $332.97 of US dollars. Okay, then based on our forecast, a long-term increase is expected. The QQQ fund price prognosis for 2026, May 20th, is going to amount to $611. With a 5-year investment, the revenue is expected to be around 83.65%. And when you round that up, ladies and gentlemen, it's 84%. All right. That is what people are predicting in the next 5 years, that this particular stock that we're going over is going to be at a whopping $611. Can anyone tell me where they think AMC or GameStop is going to be in the next 5 years? See, when I look at this, ladies and gentlemen, when I look at this, I'm like, this is a much safer investment than gambling with AMC or GameStop. I have nothing against, let's be very, very clear. I have nothing against GameStop or AMC as a company. But when it comes to the investment, because certain groups are short squeezing it and short selling it and doing all sorts of things. The wacko prodigy, they're doing wacko prodigies on it. They're doing all these weird things with this particular stock. I don't want to touch it. And I don't want to give you guys advisement or information. So my thing is, I'm telling you, hey, I would not buy this. This is my opinion. This is my perspective. I would not buy it. I wouldn't touch it with a 10-foot pole. Nope. Now, granted, I look at it. I'm intrigued by it. I sit back and think, oh, man, if I really would have got in here, I would have made such and such amount of money. I do think about that. And again, I was trying to look at, because I erased it, I had some information on that particular stock. But I don't see anything here. I was trying to look in my trash because I think I erased it. Give me 1 second. Give me 1 second here. Yeah, I can't find it. Oh, you know where it is? Give me one more second. I'm trying to look for it, guys. Because I want to show you how people are making money off of this. People on Reddit are making big time money off of GameStop and AMC. Okay. And I'm really trying to get inside my email really quickly here. I think I erased it. Give me 1 second. I'm gonna look this up for you guys. I think it'll be easy if I just look in my trash. The problem is I got too many darn emails. That's what I got. I'm looking at my third email now because I looked at it early this morning. I woke up, I couldn't sleep because I was thinking about investments. And so, oh, here it is. I got it. Here it is. Let me share this with you. My computer is acting slow right now. Here we go. All right, so here's my email, and I was looking at this, where it is. I think I clicked on have trouble with the game capture. Okay, hold on. I forgot where I was, but I did look into this. Okay, I'm so sorry. I don't know where I was this morning. But I thought I was on this particular stop. Okay, let's see here. I really want to show you how this guy made lots of money off this stock quite recently because of his position, and he took a screenshot of his Robinhood account. Okay, let's see. Is this it? Let's see here. All right, here we go. I found it. Thanks for staying with me. Okay, so here it is. He showed us, look, shares, 6,000 shares. 6,000 shares. And once again, this is GameStop, GME. I know you guys can't probably see it. It's small. GME, right? He bought 6,000 shares, a market value of roughly $3 million, which is 68% of the portfolio. So he was heavy on it, right? His average cost of GameStop, listen, his average cost of GameStop was $97 per share. His today's return was a little bit over a third of $250,000, not a third of $250,000, but almost 25% of $1 million, $213,000, roughly $214,000, at a total return, okay, of $709,000. Okay, that's how much he made off that one investment. Okay, and it says, what are my thoughts? What are my thoughts? Crazy. Okay, I got some thoughts for you because I told you I'm part of this group. But again, that's one of the things I saw. There was a lot of other things that I saw. Let's see here. I'm just scanning. Yeah, but anyway, that's what I'm talking about. See, he bought 6,000 shares at an average of $97. So you can go ahead and do the math of him buying 6,000 shares at $97. Matter of fact, I'll do the math. Okay, so basically, I'm just going to do rough numbers here. Give me 1 second. Divided by 97 equals. So essentially, it looks like he bought what 60 they said at $97. Trying to see where his cost by is at. See, 97,000 market very shy. I mean, this is ridiculous. He spent 1.3 million. So you're dealing with people who can go in and buy 6,000 shares and invest $1.3 million, and then the average cost of the freaking shares was $97. Think about that. So essentially, it's simple math, right? 97 times 6,000.010 equal $583. That's ridiculous. No one's doing that. So then, then when the market value boosts up, right? When the market value boosts up, what you gonna do with this? What you gonna do with this? So if you're not a large-time mentor investor, I can't drive this home enough. Leave GameStop and AMC alone, unless you're like these guys, where you can go in and you can buy 6,000. Let me blow it up because I know some of you guys wear glasses. You can go in, you can buy. Look at that. That's going the total opposite. Let me click on this. Let me blow this up for you to see it. I want to drive this point home. I know you can see it now. So if you can go in and buy 6,000 shares and hold on to it, and the average cost of those 6,000 shares, okay, was $97. So when I go, let's see, 97, I know I keep doing this math wrong. I'm horrible. 97 times 6,000 equals $500,000. 582,000. 582,000. Okay. 500. Let me see if you can see that. 582,000. If you can see that. Okay. Yeah. If you have $500,000, almost 600,000 to invest in GameStop, buy it on the low. Like, take for instance this. Let me show you. This is what I'm getting at. So, take for instance, they say he bought it at 97. Let me see if I can damn near find 90, because he just did this. Somehow, within one of these points, he bought it at 97. Right? He bought it right around here. That's so loud. He bought it right around here, around $97, and held on to it until May, about 2 or 3 months, and then boom. Then boom. Okay? And then it jumped up. So when I look at this, let me go back. Oops. There it is. He made what? So he bought around $600,000, 7, 8, 9, 1 million. He doubled his money, essentially. Okay? So, ladies and gentlemen, by far, the information of the advisement and the education on QQQ investment will be much more profitable over the course of time than gambling your money trying to figure out when you should invest in GameStop or AMC, buying it on a dip, selling on a high. You are essentially a day trader. Let's see what you're saying. Let's see, Jacob Kitchens, man, you got a lot of but I'll go with one of these. He said, if you want to invest into something, Volation, make sure you manage your risk and secure your initial investment. But of course, I agree. He also states here, but if you want to make solid, secure investment, ETFs, like you recommend, are the way to go for steady growth. Exactly. So again, if you want some risk in your portfolio and you want a little bit of gambling, like myself, I'm getting into poker. A couple of buddies of mine last week, it was just $20 buy-in. And then if you want to buy in again at the break, it was just first buy-in was 25, the second buy-in was 20. They give you a certain amount of chips, and then like people were taking home like 90, 100 bucks or something like that. It was about 12 of us. We had a great time, had some food, had some drinks, played a little bit of poker just for fun. Like no one's coming in there like, yeah, man, here's $1,000. Buy-in is $1,000. Nah, I'm not. $20, that ain't nothing. That's nothing to a person who's making $35,000 a year if you know what you're doing with your money. But anyway, I rambled enough. Ladies and gentlemen, if you want a solid investment, don't forget, QQQ is the only ETF in NASDAQ that tracks the 100 stock index. You can't lose. You simply can't lose. This Financial Literacy 101, learn money and be inspired. You guys have a great and wonderful day. And shame on you if you're not a day investor and you think you're going to make some money off of GameStop and AMC. Oh no.